Hello all, good evening. So welcome to today's index analysis. So let's get started. Let us begin with yesterday's EOD data. So when we look at the FI data for as of yesterday. So first, when you look at FIIs, we see that FIIs did some futures long position, which is bullish, and then in the index calls they bought some calls. Again, this is bullish, and in the index puts they bought some puts which is bearish but not so bearish because the number is small. When we take the net of this also, it hardly comes down to 20k worth of calls being bought on the index. In the index options, if you see the net position, it's just 20k roughly. If you subtract this from this, you get 20,000 calls being bought, which is neither too bullish nor too bearish. It is kind of neutral to a positive bias. Coming to prop desk, when you look at prop desk in isolation, here there is one no negative data that prop desk have shorted a lot of calls. This is a very bearish condition where they have shorted a lot many calls, and interestingly they have also shorted double the puts. So no, this is a very bullish condition when they short so many puts, but this is also a bearish condition when they short so many calls. Now it's kind of mixed. The situation is very mixed. Now when you analyze it from both FI as well as DI, I mean pro perspective, you come to the conclusion that from the call side, this remains negative. I mean, shorting calls is negative, and shorting puts is positive. Now, this is how FIs and Pro data looked as of yesterday. Now, when we look at the client's data, what is more interesting is you can see this how the number remains the same on the call side. They have bought calls, so clients have bought calls, and they have also interestingly bought puts. So this is again a very mixed data from the clients where they bought calls and they have also bought puts. Just like how the prop desk and FI had mixed data that they have shorted calls as well as shorted puts. So it is a very tricky situation. I mean, the data is very mixed. The one thing that is very much evident. Now, this can have either of the two consequences. If this data had to work, I mean, if the call side data had to work, then obviously we know that call selling would take precedence. If it is call selling, then the market is going down. If the put side data would take precedence, then it is the put selling which would happen and the market would go up. Right, this is a broad conclusion we could draw from the EOD data, because smart money, whichever side smart money is, that side the market would go up. So assuming that smart money, if they are on the call side, there is call selling precedence and the market goes down, and if they are on the put selling side, the market would go up. So this should be confirmed with the intraday data on what is happening. Now, interestingly, we find that in the intraday, let me start with Nifty first. Nifty's intraday was pretty much weaker in compared to Bank Nifty. So we can see here that keeping that EOD data in mind, and there is no room for the market to move on both the sides, because both sides there's heavy shorting, call shorting as well as put shorting. But in Nifty, as the data showing intraday data, there was more call writing. So just observe this closely that yeah, let me place this here. So in Nifty, you can see that there is call shorting. There's call shorting present, and here you can find that there is put unwinding. So you can come to the conclusion that the smart money who are on the put selling side are closing their uh, put selling positions. So this brings us to the first conclusion that the market is not going upside for today. I mean, it is the call selling which is gaining precedence, and here you can see that the call selling remains. I mean, the call selling here increased the selling intensity, call selling increased, and you can see here also that the call selling further increased. So whenever there is increase, and you can see here that there is increased unwinding and there is increased selling. So increased call put unwinding and increased call selling. I think this more or less gave the direction from the for the index Nifty broadly in general, and then we could see some sideways action. Not much OI being built here. Price continued to head downwards, and again you can see that the put unwinding starts in the latter part, and then call unwinding intensity increases. So, with this hypothesis in mind, it's very much clear that the call selling, smart money, which was on the call selling side, took the market down, and they also unwound their puts. So, this brings us to the conclusion that the closing was bearish, because the call writers did not unwind their position towards the end. Right? You can see here that in Nifty, the call writing almost close towards the top, and the put selling, put unwinding took place. So this logically brings to conclusion that tomorrow, if this has to continue, the market has to, and if the call selling, since the positions are open, maybe a short journey on the downside is still open because the call selling positions have not been closed. So that can be a logical conclusion to this data. And it was bank nifty which was much stronger than nifty when you look at the OI and also the charts. First let me see the OI. So in bank nifty you can see that although there was call rating visible, but for some time there was call unwinding as well. So you could see call unwinding in bank nifty because bank nifty was relatively stronger. There was some put writing, but the put writing did not see an increased intensity like the call writing. Put writing, there was not much enthusiasm in the put writing. It almost stayed flat. It did not increase in intensity, and also you could see put unwinding. So this is also not a healthy sign. So as I discussed, since the smart money was on the put selling side, they have unwound their put selling positions, and then the calls were done heavily on the Nifty as well as in Bank Nifty to some extent, but not much. So Bank Nifty was pretty much strong. It stayed in a tight range. In Bank Nifty, that's why you can see there was more calls, I mean puts, than calls throughout the day, and in the end you can see unwinding of both. But this was not the case in Nifty. So I mean overall, OI for Bank Nifty is much better, but still because the index is weaker, Bank Nifty also relatively try to underperform. When you look at the charts now, let me first come to the order flow. So order flow for the first candle for Bank Nifty, you can see it is negative obviously, but the delta is also negative, and the loss is like only 10k, or you can say 9k is the loss, which I don't think is significant. See, when we have to think about a significant loss of delta, vis-a-vis min delta or max delta, it is just at least half you must think of. I mean, if something loses more than half of the min delta or max delta, that is significant. But the loss was not so much in the case. So the bias should be in the direction whatever the candle is telling. It is bearish. So, but in the second candle, you see that with the delta reduces, right? The delta reduces, and you can see the loss of. This is what I say. Almost half it has lost from 24 to 12, right? So almost half it has lost. So it makes a case for almost a limit buying kind of situation in Bank Nifty at this level. So mark the low of this candle, right? So this could probably act as a support zone. This low, and in fact, Bank Nifty has closed inside this support zone. and then market reversed, and it crossed the day's high, but it was not able to cross further upside because of the negative sentiment prevailing in Nifty. So Bank Nifty stayed entirely within the range. It created this box situation, and it traded entire a day within this range. So relatively, that's why I mentioned Bank Nifty is stronger and it fell less than Nifty in the thumbnail. So and here you can see some limit selling condition also appearing because the candle is red and the delta is green. So a kind of limit selling condition, and the high of this will become the resistance. And you can see here also that the I think this was a good shorting opportunity, because of but Bank Nifty was, since it was relatively stronger, so uh, it was anyone's risk taking ability to short this. But Nifty was a better shorting candidate, because it was in coherence with the data, and you can here clearly observe that with the delta is pretty low. So when the delta is pretty low, it makes a case for range bound action, as it was very much evident. And if at all the breakout had to happen, it had to happen with a higher delta. You could see no delta coming up here. I mean, in this range when the candle was going up, so there was no delta, so there was no case of breakout either. So order flow also was confirming, that the breakout would not happen, and price rejection. And in fact, order flow also confirmed that the Bank Nifty would not also fall further because of this limit buying condition, right? And then price again coming back and closing in this range. But when you look at Nifty's order flow, it was a bit different. It was more, you can see the structure is more trending downward, and the first candle's delta is way more negative than Bank Nifty, because the delta is even higher here. It's around 100k min delta, and the delta is 84k. And then the second candle's delta, although this is a good delta, I mean, in terms of absorption, a lot of selling was absorbed in this. The price tried to go higher, but it was not able to cross the high. Unlike Bank Nifty, which crossed the high, Bank Nifty almost crossed the highest point. It went higher, kind of gave a fake breakout situation, but still it was stronger even with the data in hand. So, but Nifty was not able to do so. You must just wait because the high is very close. Nifty was not able to cross the day's high, and in fact, it is a kind of higher, I mean, lower high situation when you look at yesterday's price action also, because already you have a high here, right? So when you look at the chart, it's a simple that you can take this also as a high, and now the price is retracing up. It's creating a lower high situation. So in that context also, price is creating a negative structure, higher high to a lower high. So a price action perspective also does not good, and there's no follow up delta for this. Even this delta also, you can see the loss of green delta happening, and there's no follow up either. So there's no follow up in this candle also. So that's why, and in fact in Nifty it's very much evident. You can see green prints all around. You cannot see any, sorry, red prints. You can see red prints everywhere, and these red prints happened with increasing intensity. You can see 48k. Whenever red prints selling happened, it happened with increased intensity, and whenever it went high, it was just a grinding up move with not much delta, not much increasing delta. So yeah, data was very clear. Nifty was weaker, and order flow also hinted at the same, and Nifty closed way below the first candles range. But Bank Nifty almost closed in the range, but Nifty closed way below the range. And also today was FINNIFTY expiry. FINNIFTY also was dragged down because of the Nifty's weakness, you could say. It was almost in a tight range throughout the day, but in the last part, I think the last half an hour, it broke down the first 15 minutes range, and then it this candle broke the 3 p.m. candle broke the days. But overall, it was Nifty which contributed to the weakness. And coming to the price chart, uh, what I want to share on this price chart is the concept which we discussed yesterday. So let me first hide today's price action. So what we discussed yesterday uh, is that Nifty. crossed the high. I mean, it broke the high and it's heading for a higher target. This is what we discussed, and it got yesterday. Also, we saw a selling candle towards the end, something similar to like what happened today. Now this becomes our new high, and this becomes our new low. So when we shift the fib levels for this high to low, this becomes the overall situation for today. Now, if I play the today's price action, you could see that the first candle is negative. It is not. No, it is inside this range between 38% and the highest level. So till it remains there, it is pretty much bullish, and you can see that it's not able to go up. So this is a case of it creating a lower high structure. So what I mentioned there, this is a high, and this is a lower high. So this is in a shorter time frame. Of course, the larger structure is still bullish. So yeah, price started to go down first. It's take support at 0.382, but it's not a good bounce. There's no bullish engulfing type of or hammer type of candle getting formed here. So yeah, it breaks ultimately when it breaks 0.382. Since all the levels are so close, it breaks zero point 0.5 and it ultimately reaches the golden ratio level of 18,312, and I think it closed somewhere around there. Yeah, it you can see that it closed. Let me Yes, it closed somewhere around the golden ratio. So yeah, still nifty. Taking a good correction from here. But looking at the data, I think it can, since the call rating positions are still open, it can give a further dip, is what I feel. Something like maybe something like a dip further towards the 0.786, and then based on data, it can go up because the broader structure is still bullish. So since the call rating positions are still open, logically we should expect a further dip, is what I feel. And then let me first come to Bank Nifty. Bank Nifty was much stronger. So if you see Bank Nifty, if I hide today's price action of Bank Nifty, just a minute. First, let me remove the Fibo levels and yeah, replay it till yesterday. So this is what we discussed, that Bank Nifty almost is at the highs. So that becomes our new high, and this we can take as a fib level. So now if I start playing today's price action, you find that it opens at the resistance, and it tries to cross the resistance, but it is not. But even after the Bank Nifty failed to somehow cross the resistance, it did not fall below. It just hovered around the entire first candle's range throughout the day, and it is still healthily sitting above the 0.82 level for this retracement, for this up move. For this up move, it is still. So logically, Bank Nifty can give a bounce from here, 0.382 or zero point 0.5 or even zero point 0.6. So uh, since the structure is bullish, so what we can logically expect. So overall, a Bank Nifty is still bullish. It was stronger than a Nifty. Coming to FINNIFTY, because it was its expiry. So if I redo this, yeah, FINNIFTY also, broadly all the three indices have the same structure, but some are relatively performing more and some are less. You can see that FINNIFTY, if you try to take the highs of yesterday, this is what it looks like, the levels. And then when you today it broke 0.382 and zero point 0.5 initial candle itself. So this makes FINNIFTY a bit weaker, like Nifty, and then it breaks zero point 0.3, takes support from zero point 0.5, and then it's not able to bounce. Right, there's no follow up this bounce, so it is heading downwards. As you can see, the structure is going continuously down, bouncing, giving technical bounces from zero point 0.5 level, and then finally it breaks the 0.618 also. When it breaks 0.618, we know it's a very strong level that it is heading towards zero point 0.7, and ultimately it closed somewhere around zero point 0.7. So FinNifty has taken a maybe a longer retracement for this swing compared to Nifty and Bank Nifty. Also expiry was the context. In fact, max pain levels for FINNIFTY was around 19,500, but the max pain level shifted downwards towards 450 because of the increased put unwinding and call writing. So FINNIFTY closed around 415, which is almost close to this level. So yeah, that was how today's expiry played out. If I have to look for FINNIFTY's data also, I think it is almost similar. Let me just check. Yeah, when you look at FinNifty, FinNifty was almost similar to Bank Nifty till some part, but after that, you could see put unwinding as well in FinNifty. Overall, one thing to be kept in mind is always the Nifty drives the sentiment of the overall market, and if Nifty is weaker, then even the best of the stocks, they tend to underperform on that day, but they will relatively outperform Nifty. That's what happened today with respect to Bank Nifty being much more stronger. So when we, I mean, a broader instruments, if we have to just see which contributed to today's downfall is the Reliance, the index heavyweight. Now Reliance, we can see here that Reliance, why Nifty fell more is because of Reliance. This is a heavyweight which fell 1.4%. And apart from Reliance, there are other heavyweights also, which are part of Nifty as well as FinNifty and Bank Nifty. Like for example, you can see here that the HDFC, oh, sorry, HDFC, all this, yeah. So it is HDFC Bank also and HDFC. So both HDFC in fact is part of both FinNifty as well as Nifty, but it's not part of Bank Nifty. HDFC Bank is obviously part of all the three indices. So HDFC Bank, I mean the big heavyweights, Reliance and HDFC. So these three contributed to Nifty's weakness almost. And FinNifty has both HDFC Bank and HDFC. That's why FinNifty also uh, fell relatively. But overall, you can see that FinNifty is 0.74% down, but Bank Nifty is just 0.227 and 0.38, whereas Nifty is zero point 0.6. So this itself shows that how Nifty and FinNifty underperformed compared to the Bank Nifty. So that's it. I mean, looking at the data, it is one can easily conclude that the EOD data would obviously be bearish. I mean, we can easily come to the conclusion because of the open uh, call rating positions which have been kept. This call rating positions have been kept open. They have not unwound in Nifty. There's unwinding in Bank Nifty, sorry Nifty. So this would contribute towards call writing in EOD data of big players. So let us discuss that later. But since EOD data will be bearish, and today's action is also bearish, so logically the price can take a small dip further and then take off. It is such an action. Depends on tomorrow's intraday data again. So overall, this is about the levels and OI data as well as order flow. Broadly, and one more good part is the dollar. Was again, dollar is still in a downtrend. As you can see, it on a daily time frame, it took resistance at the 0.38 level, and still it is kind of reluctant to come down from that level. But overall, till dollar stays below this level, it is good for the equities. So yeah, that's it about the macros. I hope this analysis was helpful. Thank you.